Hey there, welcome back to our series, The Big Beautiful Bill, What It Means for Taxpayers. Saprahawks Sir Arkine. If you're just tuning in, we've already covered changes to tax brackets, standard deductions, child tax credits, education benefits. And today in episode 3, we're breaking down what's happening with capital gains, retirement savings, and small business deductions. So if you're investing, planning for retirement, or running a business, this episode is for you. Let's get into it. Let's start with capital gains. Because this is where a lot of middle and upper income taxpayers feel the heat. What's staying the same? The 0%, 15%, and 20% long-term capital gains rates are still in place. Income thresholds for these rates are adjusted for inflation. There's now a new 15% capital gains rate floor for most taxpayers who fall into the middle income bracket. High-income taxpayers are now subject to expanded reporting requirements and a possible surcharge if their gains exceed a new threshold. What does that mean? If you sell stocks, real estate, or other assets in 2025 and beyond, you'll want to be strategic about timing and thresholds. Now let's talk about retirement. And trust me, the Big Beautiful Bill has a few surprises here. Traditional IRAs and Roth IRAs are still available. 401k and 403b contribution limits are still rising with inflation. The bill increases catch-up contributions for those 60 and older, now up to $10,000 annually, indexed for inflation. Roth conversions remain allowed, but with new income disclosure requirements. Employer-sponsored plans can now offer emergency savings accounts linked to your 401k. More ways to save, protect your money, and reduce taxes in retirement, especially if you're 50 or older. All right, entrepreneurs, this part is for you. The Big Beautiful Bill offers some great incentives for small businesses, freelancers, and side hustlers. The 20% qualified business income deduction under TCJA has been made permanent. Expanded depreciation limits for business equipment and assets. Increased deduction ceilings for Section 179, helping you write off more of your purchases faster. A new startup credit for employers who begin offering retirement plans to employees, up to $5,000 per year for 3 years. Expanded credits for employers offering paid family leave and training programs. Small businesses get more support to grow, hire, and save on taxes in 2025. Here are a few quick tax tips based on these updates. Capital gains. Plan your asset sales wisely to stay under key thresholds. Consider holding long-term to reduce taxes. Retirement, max out catch-up contributions if you're over 50. Use Roth accounts strategically. Business owners, track your expenses. Take advantage of the new deduction limits and credits. Talk to a tax pro about Section 179 and QBI strategy. Let's recap episode 3. Capital gains are more sensitive to income thresholds, so plan your sales. Retirement contributions just got more flexible and rewarding. Small business owners have more deductions and new incentives to grow. And in episode 4, we'll cover credits for caregivers, gig workers, and renters, including some hidden gems most taxpayers miss. If this episode helped you, hit that thumbs up button and subscribe so you don't miss the rest of this must-know series. Drop your questions or share how you're planning for these changes in the comments below. Thanks for watching, and I'll see you in the next one. Stay empowered, stay informed, and stay ahead of tax time.